Welcome back. Hotspots of conflict are emerging across the globe, from Latin America to the Middle East. The recent tightening of the Strait of Hormuz is sending shockwaves across markets as uncertainties abound for the global energy sector. In Malaysia, on the other hand, indicators suggest a period of robust sovereign growth. The question is, how do we make sense of these two seemingly contrasting perspectives? Joining us to answer that question is Muhammad SEDEK JANTAN, investment strategist and country economist at IPPFA. SEDEK, thank you so much for joining us online. SEDEK, it's been an incredibly tumultuous past 72 hours on the geopolitical stage. Before we dive into the numbers, walk us through how the market has moved in the past few days.
Jason, so what we can see that the current situations of the Middle East, when we talk about the Middle East, is always that's been synonyms with the global energy supply. And I can say that in terms of the capital market, we can see that the sentiment have been changed, and people have been start to be more cautious, and also try to shift their portfolio into the safe haven assets such as of the US dollar and also gold.
Thanks, SEDEK. I want to zoom in a bit on the question of global oil supply. As you mentioned, with growing tensions and uncertainties around the continuous operation of the Strait of Hormuz. How do you think we should expect global oil supply to be affected in the coming weeks?
Okay, the risk of the global supply, if let's say we can see right now, is considered as a serious, not the theoretical, but in terms of the operational. So we are effective witnessing the de facto closure of the Strait of Hormuz, while it has not been formally declared shut down. So commercial flow are severely disrupted. So the strait carries, if let's say we can note, is about 20 to 21 million barrels per day, equivalent about 1/5 of the global consumption. So even partial disruptions at the scale materially tightens global supply conditions. So based on the shipping and trade flow estimate, and what we can see, approximate about 20.5 million barrels of the crude oil and fuels have been stored, and estimate about 1.68 billion of the daily trade value affected. And oil price, we can see, is a repricing higher by roughly around 5 to 10 US dollar per barrel. And overall, 200 vessels stranded, and the amount is roughly around 20 to 30 million USD, and this is will be involved of the insurance related costs. And overall, we can see that the 20% of the global LNG supply risk rising seriously. I can say that the most significant development in the last 24 hours, when the Trump announced the order of the US Navy to be escorting the oil tanker, but what I can say is in the theory, even though that's the army have been escorting, but in terms of the what we call it, the logistic of the oil, the insurance company is now trying to exclude the what we call it, the Middle East as under their coverage.
SEDEK, this is not the first time that conflict in the Middle East has disrupted oil supply. I mean, every other year, there is a conflict in the region. Tell us about the scale of this time around. How big should we put these events compared to events of the past?
So when energy supply is threatened, price do usually follow, but the transmission is ordinary. Consumer is not immediate. So what I can say is that the first channel is the oil itself. So let's assume that currently we can see that the oil price now at the price of the 80 to 85 US dollar per barrel. So, however, the higher crude price initially affected logistic and also transportation costs, not retail price directly. The impact is only reached consumer during the second transmission phase, when businesses begin passing higher input costs on the household. So that process takes time, and I can say it's roughly around 3 to 6 months. Depends largely on how long tension persists. So the more immediate impact for the everyday Malaysians, I can say this is actually through the currency channel. So as we can see, during geopolitical crisis, capital typically shift toward the safe havens currencies such as the US dollar. So emerging market currency tend to weaken in that environment. So however, Malaysia Malaysia, like if we see for the past 2 years, the ringgit has been strengthened, so supported by improving fundamental and also external balances. So that provide a buffer against the important inflation in the short term. Only after that we do assess the all pass-through inflations for the domestic fuel. For example, the mechanism of Budi 95 and also there's a subsidy diesel scheme help delay the immediate shock. This policy act as a caution, preventing the direct and sudden rise in the household fuel cost. However, the no economy is a fully insulated. We can see that many local produce goods still rely on the imported intermediate inputs, and like I can say raw material, packaging, components or machinery. So if business face higher import costs due to the elevated energy prices or shipping disruption, they will eventually adjust the price. So this typically appear in the market with the lag of the around next 3 to 6 months, as I mentioned just now, often reflected to the new inventory batches rather than the existing stock. So impact on the cost of living will be, let's say, gradual, not instant. But I can say that we still expect headline inflations to drift modestly higher towards around 2.2% by end of this year, assuming tension do not escalate significant further. So these key variables remain durations and short-lived spike. I can say there's a great limited pass-through. Prolonged disruptions will amplify the second round effects.
So I do want to, on the last bit on whether or not this lasts for a short while or a long while, the current conflict may prolong into weeks, possibly months, or possibly years. What scenarios should market observers, on the last note, and investors be preparing for? Will this affect a slowdown in hiring if firms predict slower economic growth?
I can say this a slow economic growth is quite drastic, if let's say we can say, because when we talk about the economic growth whole, yes, if let's say we refer to the IMF, the forecast is about 3.3 for this year for the GDP growth. But I can say that due to this Middle East tensions, it can be, let's say, reduced to the 2.8 to 2.7 for the global economic growth. But I can say that it's not like will be effect to the whole country, but I can say this is only like the isolated. And for this scenario, I can say that the effect is will be, let's say, focus on the Middle East rather than the escalate to the Asia, Europe, or even let's say in the North America. But what I can say that the tensions due to the disruption will be give some of the delay, and this kind of delay will be, let's say, impact to the company in terms of the, let's say, make the investment decisions. So in terms of the, let's say, capex, and in terms of the how they want to do the new investments for the product, it will be, let's say, depends on the current situation, which is if let's say the tensions, it will be, let's say, getting high. And I can say that now, if let's say we can measure whether or not that's a Middle East tension, it will be like getting serious. I can say that compare 1980 until now, in terms of the Middle East alone, the current tension is considered as the worst, and this will be like the impact, like you said, asking just now, in terms of the, let's say, hiring and also like the new investment. But I can say that it's need to look on the different multiple sector. Like for example, in terms of the I can say in terms of the consumer, and also in terms of the technology, we don't see will be much impact. But in terms of the energy related sector, like for example like upstream and downstream, it will be, let's say, give the impact.
SEDEK, thanks so much for your incredible insights. That's all the time we have, unfortunately. I wish we can go more, and I think the whole world is really wanting to dive into the impacts as we approach the weeks to come. Thank you. We were joined by Mohammed SEDEK JANTAN, investment strategist and country economist at IPPFA, speaking on global market outlooks in the wake of conflicts in the Middle East. We'll be right back after a break, and stay with us. Bernama World keeps you updated across these stories shaping the globe right now.